Hello from Cboe Global Markets. I'm Kevin Davitt, and this is Vol 411 for Thursday, July 25th. The closing value for the VIX index yesterday was the second lowest observed in 2019. The only lower reading was April 12th at 12:01. Yesterday also marked a new intraday and closing high for the S&P 500 index. In fairness, 10 and 30-day historical vol in the SPX are running between 7.5% and 7.65%, so there's still a fairly meaningful volatility risk premium in this market. Over the past few sessions, upside VIX call options have been the story. Yesterday, there was a very meaningful volume in the August 20 calls. More than 260,000 of those options traded around 35 cents. On a typical day in VIX, roughly 2.1 calls trade for every one put. Yesterday, the call-put ratio was about 8-1. That was the highest ratio since May 1st of this year, which was also an S&P 500 top. Prior to that, you have to go back to January of 2018 for a ratio as high. Currently, the VIX index is higher by about 60 cents to 1265. The S&P is down about 7 handles and has held the 3,000 level. Today, the markets appear somewhat disappointed with what Mario Draghi of the ECB had to say during his press conference this morning. There seems to be an expectation of global dovishness, which would include accommodation on the part of the ECB, the Bank of Japan, as well as the Federal Reserve. We are less than a week away from the next FOMC meeting. Expectations have moderated a bit for the Fed. Last week, the odds were on a 50 basis point cut, but currently the likelihood is for a quarter-point reduction. If this stuff is of interest, you could sign up for our Inside Volatility newsletter that goes out every other week. That's Vol 411 for today. Thanks for tuning in.